Hello, everyone. Welcome to today's webinar entitled Uncovered Unemployment Insurance Gap on Insurance Gaps and Reform Proposals in New York State. I'm really pleased to welcome Ian Greer, David Kallick, James Perro, Rebecca Dixon, Anjana Malhotra, and myself, Anne-Marie Brady, the Research Director, to moderate a discussion on the research and the facts to inform reform of unemployment insurance in New York State. We will be starting with opening remarks from Ian Greer, who will discuss how UI works for New York State and remind us what some of the problems are and how New York State compares to other states, to its neighboring states. Ian will set the scene, and then we'll move to a period of reflection from our panelists. We'll be joined by Rebecca Dixon from the National Employment Law Project, and she will talk to us about who is impacted by unemployment insurance and why. And then James Perro from the New School for Social Science with the Center for New York City Affairs. We'll discuss how we finance unemployment insurance in New York State, specifically the debt with the New York State Trust Fund, and what changes need to be made so that we can move forward. And Anjana Malhotra, who is a senior attorney with the National Center for Law and Economic Justice, will talk to us about overpayment in New York State, what happened, why it happened, and how we need to fix this problem. And then we'll hear from David Kallick, who is with the Immigration Research Initiative, and he's going to talk to us about who's excluded and why, and how we need to change this. I'd like to remind the audience that your questions are a vital part of this discussion, and so please put your questions in the question and answer box, and I will be monitoring this box. And after we have our panelists present their information and research, we'll turn it over to a group discussion that will include questions from the audience. So at this point, I'd like to welcome Ian Greer, who is the director of the Ithaca CoLab at the ILR School, Cornell University, to set the scene for us. Ian, over to you.
It's Anne-Marie. So as Anne-Marie said, I'm going to talk about the problems of unemployment in the United States, and I'm going to talk about the landscape of policy proposals. Let me share my screen. Okay. So we often hear that unemployment is low right now, that we're in a tight labor market, that employers are having difficulty recruiting and retaining workers, that in this tight labor market, wages are being pushed up. And this is also facilitating labor activism, strikes and organizing, and demanding a better deal at work. And indeed, if you look at the unemployment, the headline unemployment number, 3.9%, it's similar to past periods of low unemployment. However, unemployment is still a big problem in this country. One of the issues is that spells of unemployment are getting longer. So at the moment, despite our low unemployment, the average spell of unemployment is about 20 weeks, which is similar to the peak in the economic crises of the 1980s and 1990s and 2000s. And it's a lot more than was ever reached during the economic crises of the 60s and 70s. We also allow our unemployment rate to get pretty high in this country, higher than other comparable countries. During the last two big crises, we had relatively high unemployment, higher than the OECD total. We reached 15%, which was one of the highest in the world during the COVID pandemic. And unlike almost any other country, we have experienced declining labor force participation over the past 25 years. This means that there are unemployed people who are dropping out of the labor force. Female labor force participation is declining. The only other country that has experienced a decline in labor force participation is Iceland, which has been experienced a much smaller drop and from a much higher level. Um, Unemployed workers form a really big group, actually, even right now at a time of a tight labor market. So 3.9% of the workforce is actually 6.5 million workers. Um, there are also 4.5 million workers who are underemployed in the sense that they're working part-time for economic reasons and they want more hours. And there's more than 5 million people who are outside of the labor force, but they want a job. They've stopped looking, but they want a job. So if you take these three categories together, the unemployed, the underemployed, not in labor force, but want a job, we have about 16.5 million workers who could really be supported by better supports for job seekers. This is kind of in the same ballpark as the number of employees in healthcare or leisure and hospitality or retail trade. And it's a lot more than are in manufacturing or construction. So we're talking about a lot of people, and we actually don't support them very well. I mean, we spend less than almost any other country on benefits for job seekers, and for supports to help them get back to work. We have relatively low benefit levels, and they're not particularly high if you are getting UI. It's about a 50% replacement rate for, in this example, which is, there are a lot of countries that pay more than that. But if when workers exhaust their benefits and they switch to means tested benefits, we are among the least generous in the world. The replacement rate goes down to about 10%. Most unemployed workers in this country don't even receive benefits. So most assessments say about 30 to 40%. That's what this comparative figure shows. And again, we are relatively low in this world. This number would be much lower if we removed people getting partial unemployment benefits. There are people who get these benefits who actually are working, are underemployed. So this number actually exaggerates how much coverage we have in our system. So during the pandemic, there were in this country pandemic era benefits that addressed quite a few of the problems in our system. Um, so we had millions of workers who received benefits who would not have received them previously. And this is because of pandemic unemployment assistance, pandemic extended unemployment compensation. These added new groups to unemployment, including the self-employed, gig workers, the lowest earners, new labor market entrants, and also it added 13 weeks for for people with a longer unemployment spell than the usual 26 weeks that people get in most states. In addition, there was pandemic unemployment compensation, which made benefits more generous and helped people survive during their spell of unemployment during the pandemic. Um, these, however, were allowed to expire in September 2021. Actually, this was a time when there was a big wave of COVID cases and deaths, but Congress allowed the benefits to expire, and there were suddenly 10 million people who didn't have their benefits anymore. Republicans worried about work incentives and business as well. And Biden and the Democrats called for a more permanent, sustainable fix to the unemployment benefit system. We have not uh, passed at the federal level a permanent, sustainable UI fix. There there's an important proposal at the federal level that has not passed. And there are quite a lot of reform proposals at the state level, which the other panelists are going to be talking about. And I'll give some idea of the landscape of reform proposals that are out there and that we're talking about in New York State. One is to increase the benefit levels. New York State has the lowest maximum benefit in the region. It also has one of the lowest replacement rates in the entire country if you compare the average weekly benefit with average weekly wage. So proposals are to increase the minimum benefit for the lowest workers, the maximum benefit, and the replacement rate, also to introduce dependent benefits, extra money for people who are caring for children or other dependents. A second area of reform is increasing funding. So we in New York State are notorious for our underfunded system, which has generated a lot of debt that employers are going to have to pay back. And the main things you can change to address this are increasing the rate at which wages are taxed. You can increase the amount of wages that are subject to tax, the so-called taxable wage base. You can reform experience rating, so charges to employers that lay people off. You can also make sure that employers that should be paying into the system that are paying into the system, including gig companies that are misclassifying their workers as self-employed. All of this would bring money into the system, and it would also make the funding more progressive and remove the burden, lessen the burden on small business. A third area is making our system more accessible to people who are eligible for benefits. There are a lot of people who are eligible who don't actually get benefits because the system is so hard to use. This is addressed by modernizing the IT systems, improving access for people with limited English proficiency, strengthening disability access, and also addressing this problem that New York State is far from unique in having, which is the understaffing of the agencies, allowing people to get through on the phone, or maybe even make appointments in person to get assistance. A fourth area is to remove restrictions. So this is what Anji Malhotra will be talking about. Basically, New York State has the strictest standards for fault and fraud, which means that people who are overpaid due to a mistake by themselves or by the agency often get demands to repay the money. Another area of reducing restrictions is making benefits accessible to striking workers. There are quite a lot of other things you can do as well. The fifth point is introducing federal rules, which would raise standards for state UI systems. There's currently no federal floor for benefit levels, for duration of benefits. So we need to strengthen standards for those. We can also strengthen standards to make systems more accessible, equitable, and more. The final point is about job seeker benefits for people who are excluded by the very logic of unemployment insurance. The self-employed in this country, undocumented workers. In New York State, the proposal is called the Unemployment Bridge Program. This is what David Kalick will talk about. And at the federal level, there's the Job Seekers Allowance proposal, which Rebecca might discuss. So that's all for me. Many thanks.
Great. Thank you so much, Ian. We'll turn it over now to our panelists, starting with Rebecca Dixon. Ian's laid out a framework for some of the general problems that are plaguing New York State, but why should we care about this, Rebecca? Why is this important? Who is impacted, and how do we place the problems of New York State in the wider context of the federal government?
Sure. Thank you for that insight, Ian. I really appreciate that. So what I'm going to talk with you about is, why is UI important? Who is impacted when you have a good program or not so good program? And why it matters, whether unemployment is high or low. I'll also talk about what's happening at the federal level, and talk about some positive changes that U.S. Department of Labor has implemented to make sure we have a more equitable system. And then lastly, I'll talk about where New York fits into the national picture in terms of the trends that we're seeing, in terms of state movement on different provisions of UI. So I'm sure you all are aware of this, but UI is the first line of defense against income loss, homelessness, and poverty. And it's a vital lifeline for families. And it was especially during the pandemic and is during any economic downturn. It is the only income support available for unemployed folks. And so, if you don't qualify for UI and you lose your job, there's just not much else actually in our system that provide social insurance. So, UI is a state federal partnership, and it's, implemented under state law. So there are some baseline pieces that all states have to provide, but then states have a lot of flexibility in terms of what amount of benefits and different kinds of ways that folks can qualify for UI. Basically, you have to be unemployed through no fault of your own, and you have to be available for work. UI is not a means tested program, so it is available to all folks who are unemployed and who qualify based on their state's rules. Benefit amounts range from $235 a week in Mississippi as a maximum, all the way up to around $1,200 as a maximum in Massachusetts. And you heard where New York is. The average weekly for the US is around $333. So you have a sense of like how much income that is. Unemployment is particularly devastating for families who have children. And studies have shown that unemployment intensifies parental stress, and that turns into issues for children's future outcomes. And UI is especially critical support when we're talking about low-wage workers, because they're twice as likely to lose their job rather than, compared to higher income workers, but only a third as likely to collect unemployment insurance. And as Ian mentioned, even in a strong job market, we still have families that need to access this program. At least 4 million families had at least one unemployed member in 2023, including 1.3 million children in families that are under 18. And I think another thing to point out is that single parents in particular are especially vulnerable to income disruptions and are more at risk. And an Urban Institute study found that unemployed workers during the Great Recession, the single parents were more likely to become unemployed, and then they were also more likely to stay unemployed for longer periods, so 6 months or more. And you could see how devastating that could be to a family to be without income for that period of time. Poverty triples when a parent is unemployed for 6 months or longer, despite the role that this program plays. And there are also racial dynamics that show up in the UI program, where Black parents are more often experiencing unemployment, and their unemployment spells are also likely to last at least 6 months. For Hispanic parents, they become unemployed more often, but tend to be for shorter periods of time. UI had a really positive impact on families during the pandemic. We had 21.7% of children in April of 2020 ended up with an unemployed parent. And an estimated 17.6 million parents received UI pandemic benefits, and nearly a quarter of all adults with children in their home. And researchers conclude that these payments, which were enhanced through the CARES Act, had a great positive impact on financial security, particularly for Black and Latinx families, while only 10 to 14% of Black and Latinx families had sufficient savings to cover their expenses if they were unemployed for 6 months, the CARES Act provided sufficient resources so that 94% of Black families and 92% of Latinx families could cover 6 months of expenses. So a really critical program and really critical uplifts were done to it during the pandemic. At the height of COVID, roughly 1 in 6 adults were unemployed and received unemployment benefits. And according to the Census Bureau, access to UI reduced the official poverty rate from 12.9% to 11.4% and prevented 4.7 million people, including 1.4 million children, from falling into poverty in 2020. So you can see that it's a really critical program. There are modernizations that need to happen to the UI program, and I'll talk a little bit about what we're seeing in the states in terms of beefing up the program. So next, really to give you a snapshot of what's happening on the federal level, there are basically 3 ways to reform UI at the federal level. There's administrative, legislative, and then we also have a powerful worker movement where there's national and state level campaigns going to improve the program. In terms of administrative efforts, I'd like to point out in the American Rescue Plan, there was $2 billion provided to Department of Labor to help prevent and detect fraud, to improve equitable access to UI, and to reduce payment backlogs, since the UI systems technologically tend to be behind, and then they receive such a surge of applications during the pandemic. So funds were put in place to help modernize those systems so we don't have that happen again. And unfortunately, in June of last year, Congress did rescind about half of those funds that weren't obligated. So effort going, but there's always some challenges. Also, I think pointing out some of the programs. So in terms of equity grants, there was 219.3 million that went to 46 states, and New York State actually received 9.1 million there. And then in terms of congressional reforms, Ian touched on this, not a ton of movement on this bill, but a really important bill that would set national standards. So set strong national standards so that each state would provide at least 26 weeks of benefits. It would also improve the UI program so that it automatically just engages when there is a crisis and Congress we don't have to wait for Congress to act. And also creates what Ian mentioned, the job seekers allowance, which would really help self-employed workers, recent grads, and caregivers, and folks returning to the labor market, including folks returning after a period of incarceration. And that's because many of these workers currently are not eligible for UI. So that would be a really important modernization to put in place there. And then lastly, to touch on a few of the state reforms that we're seeing in terms of trends. So during the pandemic and shortly after, there were a lot of states that moved to beef up their program. Some of the policies that we saw were UI for striking workers, where New Jersey and New York are there, and New York currently has a bill to reduce waiting weeks for strikers. Overpayment waivers, which I'm sure my other panelists will cover. Unemployment for school employees during summer break is one that's gotten attention, with Minnesota passing an expansive law last year. Caregiving allowance. New York is one of the few in the region that don't have this benefit. And also we're in New York not indexed to inflation. Increasing benefit amounts we're seeing, and New York is out of step on that with pretty low benefit amounts and ranking around 26th in the country. And then we're seeing efforts to improve UI administration and access and equity, including things like the Navigator program, the UI Navigator program. And one to really kind of point to that maybe something for New York to consider is Maine's Peer Workforce Navigator program. And it connects workers with good jobs, with job training, apprenticeships, housing, childcare, unemployment benefits, of course. And it helps focus on marginalized communities, so low-income communities, rural communities, communities of color, and indigenous communities, immigrant communities, and those who are not English speaking. And we think that this could be a useful program for New York to put into place to help improve New York's recipiency rate, which was 37% on average in 2022. And the last thing I would highlight that has been a trend is we're seeing interest in excluded worker programs, which offer economic support for workers who are typically not covered by UI. Focusing on workers such as undocumented workers and workers who are returning to the labor market from incarceration, and also independent contractors. And Colorado currently is the only one with a state program, which is a really good example. And then there are currently campaigns in states, California, New Jersey, New Mexico, Washington State, and also here in New York. So those are sort of the highlights of like what's happening in the other states. So you can kind of get a picture of how New York compares, and hopefully have really sort of helped understand why UI is important. And even in a time when unemployment rate is really low, it's critical that we have a substantial program that actually supports families when they need it.
Fantastic, Rebecca. Thank you so much. That really sets the framework for our next discussion from James Perrow, who's going to talk to us about how we finance the New York State unemployment insurance program and some of the pitfalls and problems with that. So James, I'll turn it over to you. Thank you.
Thank you. Good morning. It's good to be here to talk about one of my favorite topics, the need to dramatically reform the way New York State finances unemployment insurance. It's important to keep in mind that unemployment benefits are not financed out of general revenues in New York State. As with other states, with all states, unemployment insurance is financed by a payroll tax that employers pay based on the wages of their employees. And this goes into a state trust fund that funds all unemployment benefits. New York State, as you've heard, has chronically underfinanced its unemployment system. We have low benefits. The wage replacement rate is low. It's been falling. New York is one of two states at this point, the other one is California, that still has a very large UI trust fund debt. Even though, COVID started over 4 years ago, several other states have debts that they've paid off. Many states had sufficient unemployment insurance reserves to the point where they didn't have to borrow from the Treasury. New York State had to borrow, only like 4 to 6 weeks into the COVID period. Our debt went as high as $10 billion. It's still very high. It's not being paid off very quickly. We have a unemployment financing structure that as I'll explain, I think is illogical, doesn't make sense, and it's extremely unfair to small firms and low-wage industries. As Ian indicated, the wage replacement rate is low in New York State, and it's falling behind the US average. Financing reform needs to address three critical issues: solvency, tax fairness among employers, and we need to raise enough money to have adequate benefits and to improve access to unemployment. This chart shows the level of the state's UI trust fund debt. So you can see that it went very high, by the end of 2020. It's being paid down, but it's coming down very slowly. The latest data, I've updated this chart, since I last did this 6 months ago. It's now at this point a little bit below $6 billion. But as you can see, it's not being paid down very rapidly. And the likelihood is that we'll continue to live with a significant UI trust fund debt for the next 2, 3, 4 years, likely. Under federal regulations, New York State can't adjust its benefits as long as it has a UI trust fund debt, unless it comes up with new financing of some sort. This chart gives you an idea, graphically depicts how much we underfund unemployment benefits. The orange columns show the level of total wages paid in New York State. The blue line shows the level of total taxable wages on which we tax employers to fund unemployment insurance. You can see on the left, in 1979, taxable wages were a little over half of the total wages paid in the state. Look at the far right where we are today. Taxable wages have increased over sixfold in that time, and total wages have increased over sixfold. Taxable wages have more than doubled over that period. So the average tax rate, average effective tax rate on total wages paid in New York has declined. It's now less than a third of what it was in 1980. It had been about 1.5%. Now it's about 0.5%. We we levy unemployment taxes just on the first $12,500 of taxes. And meanwhile, the average wage in New York State is now around $90,000. So most of the wages are not being taxed for unemployment purposes. This chart shows how the wage replacement rate, that is, how much of a worker's average wage is replaced, or how much did they receive in unemployment benefits. Unemployment benefits are sort of geared to pay half of a worker's average wage over some base period, subject to a maximum. That maximum is very low. It's been frozen at $504 since 2019 because we've had this massive trust fund debt and no new financing mechanisms to help pay that down more quickly. At this point, the wage replacement rate for UI benefits in New York State is around 38.5%. That's the average for 2023. That's 4 percentage points below the average for the country. The average for the country is about 42.5%. Our wage replacement rate is 38.5%. This slide has bullets on the tax structure. There's a lot of complication here. I won't get into all of this detail. Let me say two things about the way New York State structures its unemployment taxes. Two factors enter into what an individual employer pays. One is the amount of their own employer account, that is, how much have they paid in unemployment taxes relative to how much in benefits have their workers or former workers received. That's a notion of experience rating. So their tax rates go up the lower their account balance is, indicating that if they have a low unemployment balance, then they've been paying out a lot of unemployment benefits relative to the taxes that they paid in. The other factor that determines an individual employer's tax rate is the state of their overall trust fund balance. The lower that balance is, or if it's negative, then a higher tax rate is levied for employers. Then there are some other complications that enter into the taxes, but we currently have a UI tax range that ranges from 2.1% to 9.9% on taxable wages. Again, the taxable wage base is currently limited for this year at $12,500. This is quite a range in taxes, 2% basically to 10%. And the difference is this experience rating factor that I want to say more about. The UI tax structure, in New York State dates back to the 1935 law that established the unemployment systems. This was established at a national level. It was initially, it was set up as a state-federal partnership program. States determine what their benefit levels are. The the details of their payroll tax structure, and so on. To put a great reliance on, quote, experience rating basically assumes that employers have some control over the unemployment of their workers. And while, that certainly makes sense at an intuitive level, if somebody's laid off, it's because their employer laid them off. But if you step back at that and think about the broader economy and the factors that can affect the overall level of consumer demand or aggregate demand in the economy that affect demand for the services or goods produced by an individual employer, a lot of small employers have very little control over the broader state of the economy that will affect whether or not they can continue to employ workers or whether they need to lay them off. We have an economy where there's high unemployment from cyclical or exogenous factors such as 9/11 or COVID pandemic conditions. We have we've had a lot of large companies offload many of their labor-intensive functions. They use contractors for cafeteria food, for janitorial services. They contract out a lot of services. This in effect displaces a lot of the labor-intensive functions onto smaller employers who have less control over, whether or not the large company that they sell to is going to demand their goods or not. And finally, we have an economy that's been put through a roller coaster because of developments on Wall Street. Think of the financial crash in 2008, 2009, and the devastating effect that had on displacing workers throughout the economy. So, when you think about it, while employers have some degree of control over whether or not they lay workers off, they by no means have majority control. And the smaller a company is, the less control they're likely to have over those broader unemployment factors. When you look at who pays unemployment taxes in New York by industry, and think about the average wage in those industries, this picture emerges, which basically shows the effective tax rate on total wages on the horizontal axis and average wages on the vertical axis. So you can see that the finance sector, the sector 52, has average wages of 300,000 in New York State. On the other hand, accommodation and food services, industry 72 here, has average wages of around 40,000. They pay the highest effective tax rate. Finance pays the lowest. So generally what we see is a picture here of very low wage industries having the highest tax rates. The highest wage industries like finance, professional services, information, where a lot of tech firms are and so on, pay very low effective tax rates. Another way to look at who pays taxes is by size of the employer. So this chart shows basically that companies with fewer than 100 employees pay an average effective tax rate of 1.3 to 1.6%. So, this is around 1.5%. Very large employers, over 500 employees, are paying 0.5 or 0.3%. So the average effective tax rate on small employers is 3 times what it is on large employers. This table gives you some idea of who's receiving unemployment benefits. This is for the 12 months through October of 2023. Administrative services, which includes building services, security guards and janitorial services, had the highest share of all UI recipients. Construction is next highest, followed by healthcare, social assistance, retail trade. Generally industries that pay lower wages. This chart looks at the demographics of who receives unemployment relative to their share of the workforce. So you can see that Black workers are very overrepresented among those who are unemployed and those receiving unemployment benefits, as are Latinx workers. So the financing reform that we need, it needs to raise more funds, but we need to change the tax structure to lessen the emphasis given on experience rating. Federal law requires that there be some element of experience rating in a state's unemployment taxes. We're at the far extreme of great reliance on experience rating. We could move in the direction of the other extreme, lessen the reliance on experience rating, allowing us to raise more money, but also reduce the effective tax rate on small and low wage employers. We need to do this, obviously, to raise the benefit structure. Rebecca and Ian both talked about the low benefit structure in New York. The average weekly benefits for the fourth quarter of 2023 were $427. New York State ranked, 27 states had a higher average weekly benefit than New York. Among our neighboring states, they had an average weekly benefit rate of $564, 1/3 greater than New York's. And New York's average weekly benefit rate was actually below the national average. The maximum rate is a good part of the reason why our average benefit is so low. The average maximum weekly benefit for our 5 neighboring states is $764. That's 52% greater than the current $504 maximum in New York State, again, which has been frozen for the last 5 years. Finally, there's a related issue that I'd like to close on. Ian talked about the increase in gig work in the economy, gig companies tending to classify their workers, to misclassify the workers as independent contractors. One of the advantages for a company in doing that is that they don't pay unemployment payroll taxes. Those workers, when they lose access to gig work, should be entitled. And under New York State law, many displaced gig workers have appealed regarding eligibility and have succeeded in that. So the scofflaw law would say that if there have been administrative determinations that individual workers for a given gig employer are eligible for unemployment insurance, that should apply to all similar workers for that employer. This would the scofflaw law would require those companies to report their wages, expediting the claimant process for unemployed gig workers. And they would also have to pay payroll taxes. The New York State Labor Department reached a really important agreement with Uber last fall, under which, because many individual Uber drivers have been deemed eligible for unemployment insurance, the company finally relented under court pressure and pressure from the state to start paying into the unemployment payroll system and to report wages for all of their drivers so that when workers are dislocated, that they can more readily claim. I'll hand it back to you, Anne Marie. Thank you.
Thanks so much, James. That's a really thorough understanding of the challenges with financing unemployment insurance in New York State. Let's turn it over now to Anjana Malhotra, who's going to discuss a really touchy subject of the issue of overpayment in New York State. What happened, why it's happened, and how we are stuck in a way with a problem that is punitive and is hurting some of the lowest income folks in New York State. Anjana, I'll turn it over to you.
Thank you, Anne. My screen is shared now. Okay, thanks a lot, and thanks so much to Cornell for having me, and Rebecca and Ian and James for their really thoughtful comments. As mentioned, I am going to be discussing the serious problem of overpayments and how New York State made upwards of 450,000 overpayments during the course of the pandemic due to its own mistakes, confusing rules, and language access barriers. Although claimants have largely and frequently not been at fault for these mistakes, the state now seeks to recoup these overpayments that claimants have already spent long ago in a severely punitive manner that threatens to plunge claimants and workers further into poverty. The federal government has indicated it doesn't want this money back and has granted broad waivers. So I'm going to speak a little bit about that. And then I'm going to talk about some of the New York State specific barriers that has left New York far behind in granting folks overpayments. Then I'm going to talk about a fix that a coalition of advocates, including folks on this call, have been working on for several years that we are working to pass this term in the New York State Legislature. So as folks have talked about, as COVID-19 devastated communities around the world, it also laid bare the structural racism and economic inequality across New York State. And part of this came through was exposed through some of the problems with the unemployment system that persists today. As Ian outlined, as businesses closed, childcare options dwindled, and unemployment jumped to unprecedented rates, more and more workers turned to state and federal benefits to increase that increased unemployment to make rent, buy food, pay their bills, pay their mortgages, and return millions back into the economy. And as Rebecca pointed out, while pandemic relief helped meet needs, it also exposed fault lines in accessing these benefits that continue in the unemployment system. That lead to some of these overpayment problems today, which I'll turn back to in a minute. Ian did a good job of talking about how the federal government expanded the unemployment benefits significantly to improve upon the low rates New York and other states have that James just outlined to mitigate the financial impact. There were 3 key programs that Ian went into: the pandemic unemployment assistance program, that the pandemic emergency unemployment compensation program, and the federal pandemic unemployment compensation, which both expanded the class of workers that were eligible for unemployment and the benefit rate to give folks a sustained level of living during that time. In ramping up these new benefits, New York and other states overpaid claimants significantly, often due to the errors the state made, confusing instructions, language access barriers, because it was a scramble to get these relief packages up and running. There were confusing rules that provided claimants with instructions. Claimants were provided with inadequate instructions. There were miscalculations of the weekly benefit amount. And in addition, throughout the pandemic, before the pandemic, state unemployment agencies have been understaffed and reliant on old technology, which often hindered capacity to resolve questions and issues that claimants had. Critically, my organization with some other organizations wrote a report describing how New York State did not translate much of the guidance, instructions, key applications, key notices, eligibility criteria in contravention of federal and state laws, leaving folks with language access issues, with many questions and translation barriers to applying to unemployment. Not only were folks who were LEP delayed and denied unemployment wrongfully, but also ended up suffering overpayments because of these translation issues. In addition, folks who are economically disadvantaged with limited technological access had issues accessing benefits and getting benefits processed accurately. The New York State, as with many states across the country, had a collapse in its phone system where it was nearly impossible to get through. Many folks we interviewed described calling for days and weeks, even months, and not being able to get through to get their questions resolved about unemployment. As a result of all these barriers and New York State's rules and errors, claimants of no fault of their own were overpaid tens of thousands of dollars in benefits, which were later, often months or even years later, deemed to be overpayments. These overpayments range from thousands to tens of thousands of dollars, and claimants had already spent this money on rent, food, loans, and survival. While the vast majority of COVID payments were not the claimant's fault, claimants across the country are now burdened with debt they did not know they were accumulating for months. New York State is currently has and is seeking recoupment on approximately 458,000 overpayments since the pandemic began. And the New York State folks have a 3-year window to repay this debt. And while we don't have exact numbers of the individual cases that New York State is seeking, this is kind of a cumulative amount where that includes the overpayment levels for each benefit level. New York State in 2023 withheld tax refunds to 117,000 people due to overpayments, which is a 53% increase since 2020. I'll go into a couple of the stories of folks who are living under the shadow of debt due to overpayments, but first, I'll talk a little bit about a solution that the federal government has made clear is available to states. The federal government, recognizing how unjust this overpayment problem is and the overpayment recoupment problem is, in the CARES Act and in subsequent federal guidance, the Department of Labor has authorized states to issue broad waivers of unemployment where the claimant is not at fault and requiring overpayment would be contrary to good equity and good conscience. DOL has left this definition to states, and unfortunately, New York State does not have a waiver process or codified definition of fault, and has instead taken a very, and historically taken and very acutely important here, has adopted a very extremely punitive definition of fault that does not require willfulness or intentionality, and consistently argues that finding, the Department of Labor consistently argues that individuals are at fault for overpayments, even though they made had no fraudulent intent and made no such mistakes. This approach of New York State reflects a general approach by the Department of Labor, which reflects a presumption that the claimant is at fault, undeserving of benefits. And we see this in many aspects of the unemployment system. So as a result of this approach and New York's narrow definition and punitive definition of fault, New York State has the highest rates of findings of fault in the country, as we can see on this slide. And I'll show you a comparative slide in a second. New York has found that of the PUA overpayments, 74% or 73.4% are at fault, 71% of PEUC overpayments recipients have been in fault, and 86% for FPUC, and 62.8% for state. New York State is one of 11 states that doesn't have a state waiver. And this is really important because the federal government has made really clear it doesn't want this money back, and states should take a broad approach to waiving unemployment. However, New York State has only issued 14,290 waivers. That's less than 3% of the people that have been overpaid. As I said, New York State has the highest fault findings in the country by far. And other states which have codified fault definitions or state waiver practices have found a significantly lower number of claimants at fault for their overpayments and granted a significantly higher proportion of waivers to claimants. While part of this problem has been New York State's kind of default zeal to find fraud and detect fraud, but in its zeal to find fraud, it has applied an overbroad definition of fault that has captured, well over 100,000 people, often living paycheck to paycheck into a shadow of immense debt. The impact has been serious. We have seen from, thousands of folks that folks in our coalition have represented, that folks are deep into debt and plunging deeper into poverty because of these overpayments. People have had difficulty. There's a 3-year window to repay these overpayments, which is very punishing and difficult. And it's been very challenging for folks to manage this debt. Some examples that I'll go through quickly, and then I'll talk about some of our solutions that we put together through years of brainstorming on how to resolve this. One claimant, Bianca Penafel, worked as an essential worker disinfecting New York City subway cars. She faced health issues from the disinfectants after working for months on the subway system, returned to Ecuador and took leave from work. She came back, her employer said she no longer had work. And she applied for unemployment, received it. After months of obtaining benefits, the DOL reversed. She now faces a bill of $13,000. There's another example is Mr. B, who worked for Uber. He lost his ability to earn his living during the pandemic, received unemployment. However, during his unemployment, he temporarily lost his immigration status because his permanent resident card expired, but continued to receive benefits. Years later, he was charged with an overpayment of over $17,000. $9,000 was waived, but he still has to pay back the remaining $8,832 in state benefits because there is no state waiver. We've represented countless folks with LEP difficulties who did not receive translated instructions and were not able to certify correctly because of their language access barriers, among many others. So, as I mentioned, we've been working on legislation that has hopefully a strong chance this session to pass. It's Senate Bill 549A and Assembly Bill 8928A. And it seeks to tackle some of the core issues with the current flawed and informal overpayment and waiver system in New York State. First, it creates a presumption of eligibility that most other states adopt, and absent clear and convincing evidence, requires the state to waive all no-fault overpayments. It changes and it actually adopts a definition of without fault, which New York State currently does not have. It's in the case law, and it's very unclear whether willfulness or intent needs to be showed. And as a result, the DOL makes determinations, and the administrative law judge and unemployment appeals board makes determinations finding folks at fault for, even though they made mistakes or the state made mistakes that were not intentional by by the claimants. And it also changes the eligibility criteria by, as I mentioned, codifying the definitions of fault and willful. It also adopts the federal standard and requires a waiver where the repayment would be contrary to good equity and good conscience. The federal government was very clear that states should adopt this standard. And creates criteria for the state to evaluate that standard. So these presumptions are really critical. In addition, it also changes the repayment window from 3 to 10 years. It creates a retroactive appeals process, as well as appeals, and requires the state to review all overpayments. And requires translation. New York State has informed our coalition that it doesn't translate waiver applications. So folks who have LEP issues who may be eligible often don't even know they have a waiver a process available to them through the federal government. In conclusion, this bill is really critical. Because it stands to increase claimants' well-being, take them out of shadows and mountains of debt. It encourages community spending and supports the most vulnerable workers in the United States. As Rebecca pointed out, people of color and immigrants, and James as well, are often the folks that are the highest unemployment recipients, face barriers, and they're also among the folks that are suffering from these serious overpayment debts right now that New York State has imposed. So this legislation essentially attempts to, realize the purpose of unemployment, which so many people during the pandemic area really appreciated. It was a lifeline. About how unemployment is part of the state and is designed to bring people out of poverty and create a sustainable method of living. And so this legislation seeks to restore that state and bring New York State in line with other states in how it administers the unemployment system.
Thank you so much, Anjana, for illuminating this incredible problem, but also the rich thoughtfulness on the proposed reforms. Let's turn it over now to David Kallick, who's going to talk to us about the group of people, and it's a large group of people who are ineligible and therefore have no recourse to some sort of unemployment benefit during spells of unemployment. As we know from earlier presentations, this is a large portion of our society, and it's a huge problem. We need to address this. So David, I'll turn it over to you to explain and illuminate the problem and some proposed solutions that you have to address this problem.
All right, thanks. I'm sorry if I think I may have shared a little too early, but here's the shared screen. So I wanted to talk, about this unemployment bridge program, and have to just at least briefly mention, I'm sure many of you know, there's a big coalition that's been pushing for this, starting in the pandemic and then continuing since. And we've been working, you can find lots of information and analyses on our website of things we've done together with the Urban Institute on program evaluation, and with the Century Foundation on policy development, and National Employment Law Project has been a part of our policy group. So this has been the product of, I think, a bunch of years of work from a lot of different organizations and people. So first I'll say, the Unemployment Bridge Program builds on the pandemic era success of the federal expansions that you heard about. So a lot of people who typically are excluded from unemployment benefits during the pandemic, we figured out a way to cover them. That included freelance workers, domestic workers, day laborers. In addition, in New York State, we had the Excluded Worker Fund, which included people who were not included in the federal expansion, especially people who were undocumented. That was a $2.1 billion fund that covered 130,000 people in New York State and was a tremendous benefit during the pandemic. And I think was administered, proved in some ways that we can do it, that the Department of Labor administered it well, it worked out fine. It was a challenge to set up, but now we know sort of how it's done. New York was not the only state that expanded benefits and extended them to people who were undocumented and other people who were excluded during the pandemic, even beyond the people who were included in the federal programs. There were a dozen states. This was more than a dozen examples because some states and DC had two, but there were a dozen states that had some kind of expansion to include people during the pandemic. And then one, Colorado, that you heard about briefly before, that actually expanded beyond the pandemic era to say this is something we should do on a permanent basis, and is now covering people who are undocumented in Colorado. So who would be covered by the Unemployment Bridge Program? It would be immigrants without work authorization, people who are self-employed, and freelance people who are earning below the median wage, domestic workers, landscapers, and construction workers who are working in small teams, and people who are re-entering the labor force after being incarcerated or being in immigration detention. And you can see the numbers here. It's a total of about 750,000 workers. That's the universe of people who would be covered, not the people who would be getting a benefit at any given moment, because of course, most of them are going to be employed. So I'll get to how many are we expecting to be unemployed at any moment in a few slides. How much would they get? So this is designed, on the one hand, to very closely match what people get in unemployment benefits. We know that's too low, but of course the parallel program can't be, it doesn't make sense to have it be more than what the unemployment benefits are. So this matches those, and yet at the same time simplifies it. So the process of the paperwork involved is not cumbersome for the Department of Labor or for the people who are applying. So it would be a flat rate of $1,200 per month for people who are fully unemployed, $800 per month for people who are partially unemployed, and for a maximum of 6 months in the year. I think people have sometimes assumed that this is a program that would be particularly beneficial to some parts of the state, in part because there are a range of people who are covered. In some parts of the state, it's going to be more people who are undocumented. In some states, it's going to be more people who are leaving incarceration. And some places, there'll be more people who are freelancers. As you look around the state, it's actually a pretty proportionate about who's going to be, how many people are covered in each area, and therefore also what's the economic benefit to the region. Because of course, as the state spends money in the region by giving benefits to people, people then also turn around and spend the money locally, and that helps to, especially in a recession, will help to stimulate the local economy. This is also a program that disproportionately benefits people of color in a way that is compensating for some of the discriminatory impacts of the way that the unemployment system is currently structured. So I won't go through all of this, just so you know that it's there. We've looked at the different categories and the different racial impacts. But if you want to look all the way over to the right, you can see that the non-white portion of beneficiaries at the bottom, the total it's 73% of the people who would benefit from this program are non-white, compared to the state population where 44% are non-white. Just to step into the weeds for a brief moment, how do we make the calculations? So you just saw before the number of people covered, and I can say how we got to those numbers. We then assumed an unemployment rate, and we wanted to be pretty conservative about that. So we assumed an unemployment rate of 6%, which was the average of years before the pandemic. It's higher than the unemployment rate is right now, but we wanted to be on the more conservative side. A take-up rate of 50% based on what's been typical in unemployment insurance programs. We'd love to see the take-up rate go up across the board, but I think that's a realistic assumption of how many people who are eligible who actually would apply and get the benefit. The exception to this is for people re-entering the labor force after having been incarcerated, where we know from other studies, unemployment rates are extraordinarily high, up to 70%. And so we assume a much higher rate of 70% for people re-entering the labor force after being incarcerated. The overall program cost is estimated at $500 million. We estimated that at $500 million. That's based on the majority of that, of course, $425 million in program benefits. It's a pretty efficient program, but also saying it's going to take some administration to hire new people within the Department of Labor. There's a navigator program I'll say a little bit more about, outreach and basic program administration. So there's money built in for that in the $500 million estimate. Where does the money come from? The proposals that have been introduced so far have been connected with a digital ad tax on large scale advertisers that would be expected to raise over $1 billion, so more than enough to cover this. There are other progressive tax revenue options, including just expanding the overall state tax revenues. I would say that an important point is that this is not an added tax on employers. We feel like for a lot of the reasons that James went into, it doesn't make sense to try to have a piggyback tax or to add to the amount that people who are paying employers on the books are paying, because it's already an illogical system. I think we thought that it made sense to cover, so it's not going to be a tax on employers. It wouldn't have any impact on the trust fund. You know, James was talking about the problems there. This would be a separate parallel program, so it wouldn't be, you know, whatever goes into this wouldn't affect the debt from the trust fund. And then people have often asked, you know, that there $2.1 billion is a number that's in many people's head, because that was a landmark program during the pandemic to help set up the excluded worker fund. How can it be that $500 million is the cost of a permanent fund that covers many more people? And there are two really basic reasons. One is the unemployment rate is far lower, right? We don't expect 17 and higher % unemployment rates anytime, we hope, anytime in the near future. So this is not for pandemic kind of unemployment. This is assuming regular kind of unemployment. And the unemployment compensation rate is lower. During the pandemic, it was higher by $600 a month, and I mean a week, and that was important and great. We would love to see that continue, but of course, we're not going to try to say that the parallel program should be more than the other. I would also say the fact that the unemployment rate is low has made some people question whether it's really, you know, like why do this now when unemployment is relatively low. I would say it's exactly the right time to do it. You know, you don't want to be fixing your roof in the middle of a hurricane. It's when unemployment is low is the easiest time to try to address these big problems. Also, as Rebecca and others pointed out, I think Ian also said, I mean, the fact that unemployment is low doesn't mean that unemployment isn't a problem. For people who are facing it, that's a lot of people still are unemployed, even in times of low unemployment or comparatively low unemployment. Finally, a note about unions. So there are, I think, a lot of challenges to make sure that this is covering people who we want to cover, but doesn't encourage bad practices among employers, or doesn't let people who are misclassifying workers off the hook from, in fact, classifying people properly. So there's built into this program, we paid a lot of attention to this, is a navigator program that would try to steer workers to the right program. So people who should be getting unemployment insurance, we want to push them towards unemployment insurance, but also people who should be getting the unemployment bridge program, we want to make sure that they can get that. And those navigators will also be gaining a lot of information about what's going on and can help people and to get to the right places. There was a lot of attention to who exactly is covered within, especially the people who are being paid off the books. So domestic workers, for example, theoretically, sort of notionally, should be able to get unemployment compensation if they're fired. The likelihood of that happening is just about zero. And at some point, it would be great to think about ways to fix that. But at the same time, we want to think about how do we make sure people are not, that the workers are not the ones who are bearing the burden of the problems within our systems. Similarly, day laborers, construction workers in small sites, landscapers, we want to be sure that they're covered. This is small scale construction where they're not likely to be being paid on the books, and where we've been working very closely with Local 79, for example, to work out a system that they feel like is going to help improve things for them at the same time as covering workers. it should aid enforcement of the Construction Fair Play Act, which would mean, so basically what would happen is applicants would be encouraged to file complaints against their employers if they feel like there have been labor law violations. Also, the staff who are receiving the applications would report redacted data every year to show where there are companies of 10 or more employees who are in violation of labor laws. In a strike, so I think Ian mentioned this briefly, some states don't allow it, but New York State, you can get unemployment compensation during a strike. That's really important for people on strike. It's also really important that if you're on strike, everybody in the workforce gets covered and not just some of the people. And so this will be a way to equalize that and make sure that that you have a stronger unity among workers rather than some people who are suddenly not going to be getting what other workers are getting. And then just finally, the Department of Labor can still pursue bad employers and certainly should be doing that, but workers are not the ones who are punished when employers are breaking the law. So I will leave it at that, and I'm not sure how, I guess I pass it back to you, Anne, I think, right, about how we're going to do,
Anne-Marie, yes.
Anne-Marie, sorry, about how we're going to do questions?
Yeah, exactly. Okay, well, thank you very much, David. So yeah, exactly. We have about 15 minutes left to our webinar, and I'd like to open it up to questions from the audience. We have a couple that have come in. I just want to point out, starting with the first question, what's interesting about this webinar is that each of you have addressed key components of inequities in the system, both at the state and the federal level, inequities both within and then between states. And so when we're thinking about how to overcome these inequities, one of the questions is, what are the barriers to these change? So David, what is the barrier? What is preventing an expansion of a sort of job seekers allowance for those who are ineligible? Anjana, what is preventing us? Why is New York State not accepting the waiver, for example? Ian, why are we not expanding benefits the way we should? James, I'm thinking about the myriad of problems with financing that you've so well laid out, so eloquently laid out, so clearly laid out. It's not a secret to anyone that these problems exist. What are the barriers? And Rebecca, from a federal level, I can't help but think, I always, when I teach social policy to my students, I teach the fact that in a way, America is like 50 principalities, right? And a lot of fiefdoms within those principalities. And the fact that we have these disparate systems of benefit and eligibility from one state to the next, the fact that Mississippi is so low and Massachusetts is so high and everything in between, the fact that we allow this inequity between states is a bit gobsmacked to me. So at the federal level, why do we allow this to continue? So there's a softball question for all of you. Who would like to start?
I can start.
Yeah.
So the interesting thing to note is that the UI program, came online around the same time as Social Security. Social Security is the same amount of benefit no matter what state you're in. And there was a conscious decision to create the UI program the way it was created, where there was so much state choice about what the benefits should be. And, at the core of that was the sort of racism, sexism, misogyny that was baked into our labor market at the time, where Black folks, weren't that far away from slavery. Where that stuff was baked into our laws and essentially set up this program where the Southern planter class in Congress is not going to vote for it unless they could actually have the choice to deny Black workers this benefit. And part of that was around, how do you keep people in a space of desperation so you can exploit them? And, there's like quotes in the congressional record, but essentially like they decided that white workers and Black workers should be treated differently. And so that led to this program being created in this way, instead of being created in a way where there's the same benefits no matter what state you live in. So that's the baked in 85 plus years ago, and the inertia and the sort of status quo bias, all of those things flow into like not being able to like modernize this program and actually make it something that can benefit most workers in this country.
Thank you, Rebecca. Others?
And I totally agree with that as an explanation for why reform is so difficult. And of course, you can, I think people who have been working on this longer than I have in New York State should chime in. I just want to talk, just say a little bit about like how it could be different. So, you know, in most rich countries, over these 75 years that our system has remained pretty much the same. It's been updated in small ways. Other countries have introduced things like excluded worker benefits. In Germany, they the coverage rate of unemployed people is more than 100% because there's such a comprehensive benefit system that covers all kinds of people who are not technically unemployed, who are underemployed, or who are out of the labor force, but they want to come back in. And you know, in those kinds of circumstances where you have a modern comprehensive system with services that are funded, where unemployed workers can actually go into an office and talk to a worker, where everyone has access to training or coaching or other kinds of job seeker supports. This means that the political agenda is much more kind of wide open, and more can be done by policymakers. So Germany, every 20 or 30 years, has a comprehensive reform of their system. They just had one about that they've been rolling out over the past 18 months called Bürgergeld, which is the second tier of unemployment benefits. And in some ways, it's really similar to our pandemic benefits. It covers, for example, self-employed people and others who fall outside of the of unemployment insurance proper. And you know, not only does it update the benefits, it also reduces some of the pressure on workers. It reduces the role of sanctioning, for example. The original intention was to get rid of sanctioning for people who were in conflict with their job center advisors. And another thing that it does is it replaces work first with a train first approach to assisting workers in the job market. So much more focus on coaching and training than they had before. And so, you know, I think this is, I don't know, as an American, this seems a little bit exotic or strange or extremely different. And but you know, I think we should have the intention of moving in that direction and getting there at some point. But yeah, as Rebecca said, and others will confirm, this is very hard, long work.
Great, thanks, Ian.
I would just say, in terms of what barriers are to fixing the financing, a lot of it has to do with the underlying problem that we face, because we have such an undue reliance on experience rating, meaning that low wage employers and small employers are really paying exorbitant unemployment rates relative to bigger employers. The U.S. Labor Department has been urging New York State for a long time to address its chronic underfinancing. This goes, you know, well before COVID came along. You know, for the last 4 decades, the simplest way to address the financing is to increase the taxable wage base. As I indicated, the employers are only taxed on the first $12,500 of a worker's wage. In Massachusetts and a host of other states, the taxable wage base is $50,000 to $60,000. In Washington State, it's like $70,000. New York State is the highest average wage state in the country, and we have one of the lowest average taxable wage bases. So that's appealing on the one hand. That's like a simple fix. However, given that we have such an inequitable regressive tax structure, if you increase the taxable wage base, you're just going to add to the burden that small employers are paying already. What we really have to do, and Albany and the state labor department, to my knowledge, haven't yet got their arms around the need to reform the financing in a way that shifts the UI tax burden to larger employers, to higher wage employers, and lessen the burden on small employers. If you did that, you could raise the amount of revenue comes in. We could have more competitive benefits commensurate with, generally high wages in New York State. Very low wage, very low benefits for low wage workers. Certainly, you could rectify that. You could add a dependent allowance, which several other states have. New York State doesn't have anything like that. So the key to financing reform really is to address, to acknowledge and address the problems that small employers are saying, and decide to overhaul the financing structure to make it more equitable, less regressive, capable of raising more money, pay down the debt, improve benefits.
Thanks, James.
Yeah, thanks. I think New York has it parallels a bit what Ian was saying, but I think New York has moved a bit from acting as a public institution to acting more as a private insurance agency that is presuming workers are acting with bad intent and fraudulently, is very over focused on finding fraud wherever it can. And at the same time, not really reflective of the mistakes or circumstances. And I think Ian alluded to this, but I think there's a hyper focus in New York State on individualism over the welfare state that requires an intervention to change. And and I think New York stands, as we've talked about, exceptionally and uniquely apart from other states and finding in high levels of fault and its low benefit of rate and its lack of, a waiver protection. And that New York is really at odds. And I think it's somewhat cultural. And I think this infects the culture of the Department of Labor because there's been no intervention on this particular issue and on several issues. And that culture kind of like infects how workers administer benefits and lawyers defend the agency and how collectors go after money and the determinations that lawyers and judges make. And even though it's illogical, there's a lot of administrative waste in this process in particular. The federal government doesn't even want the money back. It's marginal to the state's revenue to the extent it can and would get any money back. And as I mentioned, I think it really takes an intervention to address this culture. And it's hard to organize unemployed folks. And often folks are marginalized or don't have as much political voice. And so we are very grateful for Cornell ILR having this webinar to uplift these issues, because I think these kinds of interventions are really important.
David?
Yeah, I was going to pick up where Ian was. I mean, internationally, I think actually we heard a lot of recognition in the campaigns around the unemployment bridge program of what the challenges are, and I think a lot of appreciation for the idea that this is a pretty well-crafted program that is a good solution to it. So not a lot of pushback, really. I mean, of course, details and some people are just opposed, but really, I think a pretty broad acceptance on that level. It was the money. Right? How do we come up with $500 million to pay for this? I think there's some hope that was a particular challenge during an election year. So maybe in another year that could be an easier lift. And I think also what I alluded to a little bit, a sense that, I mean, in the United States, we seem to be unfortunately much better about like repairing things after there's a flood than we are at preparing for the next one. And I think that we did a remarkable job in New York with the Excluded Worker Fund during the pandemic. But the idea that we, that sort of takes the pressure off and says, well, so it's not an emergency right now. Why should we be doing it right now? When in fact, as I said, I think that's the perfect time to be doing it.
Well, thank you so much. I really wish we could get to more questions, but unfortunately we're at time. So I just want to thank David Kalick, Director of Immigration Research Initiative, Rebecca Dixon, the President and CEO of National Employment Law Project, Anjana Malhotra, the Senior Attorney at, sorry, Anjana, the Senior Attorney at National Center for Law and Economic Justice, James Perot with the Center for New York City Affairs at the New School, and Ian Greer with the Director of Ithaca CoLab, for your really just thoughtful and helpful guidance through addressing, by helping us understand the problems with the unemployment insurance system, both in New York and nationally, and also the proposed reforms. The proposed reforms give me a sense of, rich, great hope, and I think we have to hold on to that. We all know this is a long and hard process, but it's also reassuring to know that we have really amazing thought leaders at the helm driving these reforms. So thank you very much for your time today, for taking your time out of your busy schedules, and to our participants for joining us. Again, I wish I could have gotten to all the questions, but I hope that this helps us understand and move forward. So thank you.